Hi, I'm Steve Miller, and I'd like to take this time to explain my technical approach to the market and introduce slim charts to those people that have never seen them and to talk about the best use of them for my present subscribers. This is a tool to help understand many different aspects of the markets, how the markets move, the direction of the market, the momentum that exists in the markets or specific stocks, ETFs or futures, peaks, troughs, possible turning points. And I do this type of work on about 400 different symbols, about 330 stocks that I look at, of which about 80% of them have recognizable cycle patterns, plus ETFs and futures and indexes. This is what I consider a very, very good foundation on which to overlay your own work. Think of my work as a canvas to your work. The basis of my analysis is cycle analysis. Cycle is an event. Cycle's an event which repeats itself on a regular basis. Cycles are everywhere in nature, everywhere in science, everywhere in the economy and financial markets. In charting, we use a cycle analysis to identify the rhythms in the market. There are identifiable rhythms. Those are the forces of flow of money. You hear a lot of discussion about money flow, and there are indicators that can help you see that on charts. Mine is a more visual interpretation of this type of analysis. There are many cycle programs out there, and I don't really like them. They help you recognize cycle patterns, but they tend to be extraordinarily rigid. And as my method of doing cycle analysis has evolved, it's much more about feeling the market, about having all of these indicators that really provide you with an ability to have more intuitive sense to the market. So I believe that it takes more of human interaction, more of human interpretation in order to really discover and to be flexible enough to change these patterns on the charts as they change. That's why, as I read this Hearst book and got all of this great information out there, that I then let it evolve into much more of an art form than into a science. So we're going to look now at cycle analysis to see just how I do use charts in a very, very different way. One of the advantages to cycle analysis is that different from most other charts, there's a timing element to it. It adds time into it. And we do that by finding these reoccurring cyclical patterns or cycle rhythms in the markets. I'm going to start out by putting up a weekly Tesla chart, TSLA, for you to see how these rhythms in the market do show up. So here is Tesla weekly chart on there. We're going to start out by showing you how these cyclical patterns show up and how we identify them. So the first thing we're going to look at are the cycle brackets on the bottom. These cycle brackets help us identify the important lows in the markets. So in other words, a cycle trades from low to low, and you could see the rhythmic movement in here as we identify each of these important lows. These spikes in there, as I call them, or timing spikes, help point to where these important lows are. Now, the spikes are usually where the lows are in reality. It might be slightly off from where the low was supposed to happen. And then we can see how these cycles form. Now, there are many different ways that identify the cycles on the charts. In this case, I did it with simple trend lines, where I showed the advancing portion of the cycle and the declining portion of the cycle, or corrective. So the ideal cycle showed it like this, advancing halfway and declining halfway. What happened is that it rallied more than halfway through the cycle. We call that a right-hand translation. That's bullish. It leaves less time for it to fall, and ultimately you can see that I envelope the cycle in here with those arrows, and ultimately what that means is a trend exists. Now when you have a higher bottom, and you could see this higher bottom here, and higher peak and a higher peak, that's what a trend is. Higher bottoms, higher peaks, and you could see an uptrend existing in here. What happened after that uptrend is that you got a rally, as was supposed to come, identified by these two cycle patterns, but then it broke down early, and that was suggestive of a fact that the decline was likely to carry to, well, this time period right over here, and you could see that's exactly what happened. So that's how we identify the cyclical rhythms in the market, through these patterns. We also use the Hull moving average, is very, very helpful, HULL, to help identify the patterns. That's this moving average right in here. We use the default 20, and you could see that rhythm right in here. So when it turns green, it's positive. When it turns that kind of light purple, it's negative. And when a cycle pattern says it's supposed to rally, but the Hull doesn't turn green, there's a problem there, and that showed you the internal negative condition, and it stayed negative through here. So the Hull moving average is a good tool that we keep on here on the weekly chart to identify the patterns. Now let's look here, and you can see the Hull moving average still in a declining mode right over here. That hasn't changed. There was, of course, that flash crash that occurred, and that knocked a lot of stocks down into deep support areas. So the next thing you could see is that we put support and resistance zones in here, and what we hope is that when it gets into supports, that it tells you that those are time periods that you can be affecting your bias. In other words, when the bottom is supposed to come, and then you get some significant identification of that on the shorter term, like daily charts or other patterns, other tools, then you know that that's a place you can affect your bias to the long side, and you could see how that worked right out in there. So if you take a look at where we are right now, let's just move this in a little bit. Well, we lost our timing spike, so let's stay right there. And when you see two blue timing spikes here, that's identifying the time period that we expect the low to be in Tesla in this case. Timing wise, that points to the late October, beginning of November period. So we're going to look for a little bit more of a retracement in here, and then getting into a more bullish period there in Tesla. That's what we how we use this. Now, what we do on our charts for the benefit of our subscribers is put in these cycle projections. Those are the dotted lines. Generally, we have them on the last cycle, as you see right here, and that gives a sense for, well, we expect a little more downside, but then we expect it to get into a rally period. Also, you can see configuration. So what does configuration mean? Well, that's that trending. In other words, configuration is lower low, lower low, higher low, higher low, higher peak, uptrend. In this case, it's a higher bottom. That's suggestive that you're going to get a pretty good rally period in here. So we're going to develop a long side bias along the way in here, and we're going to see how it acts as it moves up into the resistance areas and how easily it moves through it. In this case over here, it moved easily up through the resistances, and you can see we had them identified in there, but it kept moving up, and that kept telling us, well, there's some powerful strength there in Tesla. So you can see what we do is we give cycle projections, we give the timing that we expect cycle bottoms to occur, and we look at a lot of other things like cyclical, like the candlestick patterns to help us also. Now these spikes, you'll notice, are colored, and we use about 6 different colors. When they're green, it means it's a bullishly configured cycle. It had a higher bottom. When they're red, it means it's a negatively configured cycle. The odds are the next cycle will struggle. That wasn't the case here, but the odds are that it will under most cases. These 2 blue ones are tell you that that's where the timing is that the low is due. Also, we use gray for neutral cycles and an orange color for cycles that are basically unidentifiable. I'll show you those in just a moment. So lots of things that you can see that are on here. We create our support and resistances using Fibonacci retracements. Now we have a lot of stocks that are in our focus list. And Tesla is one of them. 39 stocks in our focus list, plus 11 ETFs and indexes. And those are the ones we do a lot of work on our daily charts also. So in Tesla, now I just moved it over so you could see, here's that big weekly chart right in here, that cycle. So now when I move over to the daily, I have it identified in here also, that big weekly cycle coming across. We're looking for just a little bit more decline in here, and you can see the timing spikes on the daily. And here are the supports that we expect it to pull back to, and then setting up the next rally phase right in there. We leave it pretty clear as to where the areas are of support and resistance. We're at one right now. We would not be buying at this time because, well, these patterns suggest a decline, and there'll be a better time to buy. Also want you to see here that there are smaller patterns here on the daily. So here's those cycle brackets again on Tesla, and you could see how the cycle's laid out. Instead of being like this, which is the ideal, it rallied most of the time, had a right-hand translation, and set the uptrend going on here in Tesla. Look at how the bottom identifies the lows, and how the actual trending is very, very clear in here. A rally and then a breakdown sets up the big decline right over here. Now, lots of other tools that we use also. Candlestick charts. Here's an island reversal set atop. Here is a double top that formed and a bear kicker that set up this top formation, or an M top that formed in there. Also, you can see the slim ribbon in here. This is a momentum study. That's these three lines right here. And you could see this green arrow shows you positive momentum forming in there. The positive momentum stayed in place all the way to here. That little blue arrow tells you that the momentum was turning neutral in there. In other words, it had given it up. And this red arrow here says momentum had turned negative, and there's the big decline right over there that followed. So you could see the value of using multiple tools in here. On the bottom, we also, in this case, showed you that this was the period of positive impulse. In other words, a strong buying in here, and here you could see after it broke down, there was a strong period of negative impulse, and that's in that portion of the cycle. Look at how it bottomed right here as it was supposed to, had a rally that failed and then fell sharply again. So great sources of information on these charts that you can see really, really clearly. Now, what I want to show you now is some, whoops, didn't mean to do that, some variation on these, the way we set these up. In this case, you could see on Tesla on the weekly chart, these lines that show you the cycles. We do some other things also, and we mix it up really so that you can learn different variations of how to identify cycles. Take a look at IBM. Now, this one has got some different variation on here of the cyclical patterns. And here, in this case, we envelope them. In other words, we show the range that in different phases that the stock trades in. In this case, a bullish range right over here, as it's in a green zone, and this was the rising phase. The corrective phase, a yellow zone, you can see that right in here, gets into another rising phase, and there's the green zone. And then what happens is that, well, we get an unidentifiable bottom in here, and a second cycle that remains negative. You notice that orange spike? When you see an orange spike, we're confused. We don't really know, and we're not shy about it when we say it. We want to say when we're confused and say when we're confident. Here you could see on a rally and a sell-off that got about back to the same level. That's that gray neutral spike right over there. So we try to keep a lot of information about the condition of a stock. In this case right over here, you can see the phasing as it had a rally and a sell-off, the corrective zone, the rally, the green zone, and then a breakdown in about 3 weeks. That says big decline for a period of time, and you can see this big red zone it's been falling in. It's due to bottom. Here's these timing spikes here, the blue ones you can see, sometime between mid-October and early November. So we're expecting a decline in here of another 5 to 7 weeks, pretty much in line with the stock market pattern that we've been looking at this time. So pretty negative outlook there. So here you could see this negative outlook. Again, IBM in our focus list, so we're going to move over here and see that we have some information for you to see as the stock had the big break. Remember I said about 5 5 or 7 weeks of time to go on the downside. Well, here's your bear pennant that's forming. So we noted a pennant in here. If the odds are about 2 to 1 that it's going to break to the downside here, but if it happened to move to the upside right in here, this is the place where I'd be all over it right here to the setting up a negative bias, short side bias, and we have that all marked off for you. And that's really the best way to use this as we see these charts set up in these patterns. And lots of great information. Notice when it made the top in here, what we identified was a huge volume kicker pattern. See the big volume down over here? That said important top forming, the slim ribbon turning negative right there, and of course this big decline that occurred right there as momentum was negative and the top in place. So we do everything we can to give as much information to you as to you to be able to raise your probability of success as you looked at these charts. So you could see we have a ton that we put on these charts. We do all of the cycle timing information. We do the projections of the next coming cycle with the dotted lines. We put in support and resistance zones. We label the important patterns, the candlestick patterns. Look for important areas that we want to make entries and exits. All of this already on the charts as they come to you for use on the TOS platform. Now, there are so many other things that we look at that if we put on these charts, they'd be a real mess. So, other things that we look at and other things that I want to suggest that you could look at as you just use the slim charts as your canvas. The way that you can really feel the markets and the way that you can add to them. Let's just take a look at a few of these other charts that I think are very, very good that you can add in to use here. Here is the chart of IBM. We're going to stay on that one. And here's a 2-hour chart that I like to use. And this one shows you standard deviation channels right in here. These are set at, they're all built around the linear regression line that you can see right there, and 1, 2, and 3 standard deviations on this 2-hour chart. And you can see that in the case of IBM, it rarely gets more than 1 standard deviation one way or the other. And when it does that, it gets pretty overbought or oversold. And this is a disparity 55 on the 2-hour chart, which tells you when it's real overbought or oversold. Nice there. And on the bottom, the S-Slim market condition indicator. There is hardly a better indicator that I know that tells you what that combines the longer term, intermediate, and short term trends to tell you what the condition of a stock is. Once it moves through the swing zone right over here and then gets to some extreme level, that's really a bad sign. If it fails in the swing zone or near it, that's not a good sign either. And in this case, it turned dark red, and IBM is in very, very bad shape as we look at it here, as this stock has continued to look pretty bad there. Other indicators that you could use, some I use less or more of, are I'm going to show you on this chart right here as I move this one into place. And this is on the left side. These are daily charts that we're looking at right here. On the left side is the Bollinger Band, which many people use. Here's a disparity index on the daily. I have this set at 21, and you could see here after this big downside gap came right as it was quite overbought, sold off very, very hard, got very oversold, turned up, and here's that pennant forming that we talked about right in there. On the right side, let's blow this one up because this is some patterns that I tend to use a lot. On the bottom, you'll note I'm trying to highlight this, the TTM squeeze for you to see. Up on top, we have the Hull moving average overlaid over a mobile band. These mobile bands are great momentum indicators, as this Hull moving average is. Also, my favorite as far as oscillator goes is the stochastics momentum. That's on there. And how do you use the TTM squeeze? Well, when it fires with these red dots that you can see right in the middle here, and then it picks a direction, usually that's the direction it's going to go in. And you can see that right over there, how nicely that worked when that fired. Here it fired right over here and then got you that little decline right over there. So TTM squeeze, another great indicator. Really what we're trying to do here is to show you how you can use these slim charts and use it with so many other indicators that I think are really, really good. Some other indicators that I think that you can use as far as oscillators go. I like the RSI, which is Wells Wilder RSI. You can use that. You can use relative strength, which essentially compares whatever symbol you're looking at to. SPX is the default, which I often use. You can use anything else as a comparison. You can use, like, if you want to look at oil stock like Exxon, you could compare it to light crude. Great one. That's the relative strength index. As far as the money flow indicators, I like accumulation distribution. Chaikin money flow is also a good one. As I said, standard deviation channels are really good. TTM squeeze is good, as I just showed you, but another alternative to that is the impulse, which essentially recolors the bars to give you some sense of when an impulse is fired and when it's got some good momentum in there. And again, the slim market condition indicator with a 3-month subscription to Slim Charts, you get that as a bonus right now, a special we're running. So again, this Slim Charts, I think, really incredible amount of information. You can use this again as just the information that we give you, plus everything else that you want to add to it that you're familiar with using. And again, I don't get any money for Thinkorswim. If you don't have Thinkorswim, this is really the time to sign up for it and then subscribe to our charts. Any questions that you have as a person new to this, send that to slim@askslim.com. Any of our present subscribers that are looking at this, you have any questions, well, you know how to reach me. And I'm so glad, so lucky to have you as our subscribers. I will see you in the next segment. And of course, I'm wishing you all the best in your trading and great trading.